Right, we'll begin. Welcome everybody to this joint audit committee. We commence with the public session, and I'll begin proceedings by asking, is there anyone with any interest to declare?
No.
No, I take that as no interest to declare. Apologies, Shirley, have we any apologies?
I do have apologies from DCC Sarah Glenn, Nadia and Patrick Holdaway. Patrick is being represented by Ben Collett at this meeting.
Thank
Shirley,
you.
I'm representing the DCC, Shirley.
Oh, thank you.
Thank you, Lucy. And Liz Mackenzie will be joining us, but she's delayed. She's got to sort out some domestic problems, but she will join us as and when. And Peter will be joining us, but I don't know where he is at the moment. Okay, Chair's report. I have nothing significant to report. Liz and I both tuned into a SIPFA update on various things. It was talking about the new audit arrangements following the Redmond review. And what is clear is that there's going to be extra work for the auditors to do in the future, which will bring with it obviously increased costs. But there are certainly demands that have to be satisfied, which will mean more work. It also talks about the arrangements for audit in the future, and the authority behind it all is going to be the organisation that replaces the Financial Reporting Council, a group called ARGA, I think is the name, the Audit Reporting and Governance Authority, and they will really come into being with effect from 2023, so there will be a bit of a lead time. But suffice it to say that the arrangements will be changing. Richard or Andy, I don't know whether there's anything you'd like to add at this stage.
I think one thing to add, Melvin, is that we're seeing that under the old Audit Commission arrangements, we couldn't choose our auditors. And now in the current arrangements, we can choose our auditors. And I think the recommendations going forwards is that we wouldn't choose our auditors again in the future. So at the moment, we're appointing through PSAA, the Public Sector Appointment Authority. So we are appointing through the PSAA, as most organisations are. But in future, it may not be our choice as to who is actually appointed as our external auditors under those proposals as well.
I think
Yes.
it's still like there, Richard, that we can going forward, because you have to opt in, I think, between September and January if we're going to go the national process. I mean, Kevin maybe had a comment later if he's heard anything different, but I think there's still that choice.
Okay.
Yeah, I think for the current PSAA arrangement there will be, but once that new body comes in, so the ARGA comes in, we may not be able to appoint in the future.
Thank you. Well, we'll watch progress and review it as for future meetings. Coming on to the minutes, matters arising in action log. First of all, has anyone any comments on the accuracy of the minutes? No? So we'll consider them as read, and there were no action points arising, so I think we can move on to the next item, which is the SIRA report, the Senior Information Risk Officer, and we welcome Amanda to present her report. Over to you, Amanda.
Good afternoon, everybody. Can you hear me okay?
Yeah.
Yes.
So I'm going to assume everybody's read the report has been circulated, and I'll just touch on a couple of areas and then take any questions. I've also got Marion Perlevay here, who's the Data Protection Officer, and again, we can pick up on anything in her area. So the paper's in the usual format, which members will be used to now. You're getting it a few months earlier. You remember last time we agreed we would have it so it's closer to the cut-off of the end of March, so the data feels certainly a bit more relevant. You'll see from all of the areas of activity and where we've made a number of improvements and brought in new technologies that the force has both prioritised and given us resources. There was some successful bids last year in order to ensure that we're doing what is often invisible but certainly very important activity in our infrastructure space to help us improve. And also a lot of the infrastructure and device changes that we made as a result of COVID, so getting new laptops out to people, moving us onto Windows 10, getting all of the accreditations that we needed to do to fast track the rollout of Office 365, has put us in an improved space, certainly from an accreditation point of view, in some of the areas that the contents of this report talk to. So there's been some positive both around that and then, as I say, also around the prioritisation of bids and activity for improvement. The force has led and assisted the National Enabling Project, that's the NPCC police rollout of Windows 10 and Office 365. We led on trialling for them and piloting a new security solution that allowed us to join the NMC, that's the National Monitoring Centre. Now all of policing gets its security alerts together in a single place. That makes us kind of safer. We get our alerts that way, and we're also able to respond to any incident in that way. And I'm particularly proud of the work that the teams did there in order to assist that national programme, but also fast track us into our connections. We were one of the early forces. You can see that our performance on freedom of information and subject access requests, that performance data for our transparency to the public has taken a bit of a hit in our turnaround times. That again has primarily been around COVID. All of those staff went and worked remotely, so ensuring that they had the equipment and capability to respond. But equally, as you all recall, particularly in FOIs, a lot of the data that is going to be sent out has to be achieved by our normal constabulary officers and members of staff. And of course, they were either prioritising other work or sometimes not there in the office. That said, you've got the report from the ICO audit later in the paper, and they didn't call out particularly anything that was of extreme concern there, but it's something that we keep an eye on, and that performance data goes to the Deputy Chief Constable certainly monthly, and then we see it in our regular joint Chief Officer meetings and joint Deputy meetings that are on bi-monthly and quarterly basis. So we ensure that we're tracking and keeping a log of that. The report then talks about some of our future focus. One of these around robotic process automation will be something that we will look at in the areas of FOI and subject access request. Anything we can do there to start to be able to deal with what you can see as an increased number of applications. On the security incidents, again, you'll see members will note that the CPS data breaches, again, we have got better at those, we've reduced them, but the new disclosure legislation is causing us to see some more of those again. So we're working closely both with the criminal justice leads and with the CPS in order to manage that. Some of those are initially deemed an inappropriate disclosure, but then when you look at the circumstances of the case, that personal data does need to be released and comes under the law enforcement directives. We just need to take a bit of time to work through those. The statistics you'll see there on devices lost and found. Members will remember you were quite concerned on Thames Valley Police's behalf that their numbers were high. Their numbers are still high. It's good to see that we are getting the retrieval rates, though. We're not yet able to break those down other than very manually. And so I decided to put them in as combined. We will try and record them in a way that breaks them down. So we are finding some, but the deputy in Thames Valley is as concerned as you were and is now looking at penalties and courses of action, looking at where we might have people who are continually losing or getting them stolen. I can remind members, though, that all of these devices are encrypted in such a way. And on the upside, the fact that they are reported means that we can take all of the measures necessary to completely disconnect everything. So it is important, particularly if we go down the route of penalties, that we don't put people off letting us know that something's gone awry with the device. It's balancing that level of information. We've also got there the data around malware attempts. As you can see, the numbers are those which we see across the majority of public sector organisations. But one point to note is these are all attempts and haven't been successful. Recently, there was quite a significant malware alert that came through, whereby we all got instructed to, on a rapid turnaround, to do some security patching. It was excellently handled in the force, picked up straight away. We provided returns nationally to Commissioner Ian Dyson, and the constabulary was up there in the highest batch of forces in the way that it responded. We had engineers coming out late at night and through the weekend in order to ensure that we did those patches. That wasn't seen in all forces, so the force was congratulated around that. We have actually got a new ICT security manager, Jeff Reynolds, joined us this year, and we've seen again a real improvement in the proactive planning. Actually, Jeff did work for Hampshire Constabulary's ICT before the department merged, and he left but has come back to us after being in the private sector, and that's really good to see him back. He's brought some good practices for us, and I think really is really helping us with our future focus and planning, but certainly making those networks and connections in responding to incidents such as the one I just talked about. The report then describes all of the CSIRO decisions that I have accepted risks on or agreed mitigations. A number of those COVID ones you did see last year. If you remember, I included them because we did start to make those kind of towards the end of March 2020, going into April and May, but we thought it was relevant for members. But you'll see that there are more coming through there. We've also set up a good review mechanism. So all the CSIRO decisions, some of them do go way back. We do a review quarterly, myself, Marion Perlebay, and Mike Latanzio, the Director of IT, and we just double check and dip check into the mitigation actions, particularly when they're business process ones, just to ensure that they are happening, people are getting the training that they are supposed to be, and they are following those mitigations. And I'm pleased to say that that is the case. And equally, any that are no longer relevant because either that program has gone live or a change has happened or we've had an improvement or doing something differently, we now close those and take them off the books, as it were. Our future focus and technical changes, you can see there, all of those items that are listed did actually have funding bids last year, so they're in train and in the pipeline and timetable of activity for this year. Also, as the constabulary's medium-term financial planning process is just starting for 22-23, we will be making sure that we've got the right bids in there, and particularly around where we do IT health checks and there are remediation actions, making sure that we have both the funds and the prioritisation of the staff and the resources in order to be able to complete those. And then towards the end of the report, you've got the appendices with the data that is listed in them. And with that, I will take any questions.
Thank you very much, Amanda. I'll kick off, if I may. If I refer to paragraph 318, which talks about the Forces Public Services Network, first of all, a comment that we seem to be on the right track, going from red through amber to and heading for green. But the question I have, it mentions that about vulnerabilities. Whilst both forces are still doing everything possible to address remaining vulnerabilities, I'm just wondering if you could explain what those vulnerabilities are. Is there anything significant that we need to worry about amongst those vulnerabilities?
No, I don't believe that there is. Some of the vulnerabilities were around some of our legacy applications, and certainly for Hampshire Constabulary, particularly since Contact Management Programme went live, those legacy systems we're no longer using. Where we are having to use a level of legacy infrastructure or system, we're now putting a secure wrapper around that. So we're standing it away from the rest of the infrastructure, and we're able to either firewall off or separate it out. And we do that with our accreditors, both the national policing one, but the external ones to do and test that. So some of it is about the speed that we come off of legacy, and some of it is about how we apply or are able to apply security patching or understand on mitigating risks. So I think we're certainly seeing those decrease. And as I mentioned before, on any malware and the recent incident, we're not seeing any impact on those. So I think they're the sort of vulnerabilities, as I say, that a lot of organisations will have. It's about knowing those and managing them.
Thank you. On a similar note, on paragraph 331, where we're talking about phishing, I know that there were various phishing simulations carried out from July to December 2020, with a final report coming out in the summer. Similarly, is there anything in the findings? I know the report hasn't been issued yet, but is there anything pending that we should worry about?
What we saw was where perhaps it was individual behaviours. So some people were very good at spotting that it was a phishing email, but there were others where some of the more obvious signs weren't spotted. So that followed with a campaign of awareness. Also, we've ensured that the National Cybersecurity Centre's training around online awareness has gone out to all officers and staff, and we promote that. But we didn't see anything that would have got through our quarantine anyway, so we mimicked it through. But I think it was the thing that it was about people just not spotting it, and hopefully the training that we've given and that awareness has helped them in their own lives as well, you know, because phishing and certainly phishing emails are common for individuals.
Thank you. And my final question before I hand over to others is that paragraph 3.6, we talk about the voluntary audit by the ICO, which took place in February, where there are a number of issues there with a limited assurance for governance and accountability. From the audit committee's point of view, can this report be made available to us at some stage?
Yes, certainly it can. I thought it was going to be handed over and reported into here, and I only got the agenda sent through to me this morning, and we've realised it's not there, so we can get it onto the committee's next meeting, but we can also circulate it in advance with a briefing from Marion.
Yeah, thank you very much, Amanda. And the limited assurance on governance and accountability, again, could you position that with, is it something we should really be worried about?
I'll hand over to Marion to follow up, but the way they came to limited assurance was by the numbers of the actions, and some of those in that governance and accountability were around the fact that Marion, as data protection officer, one of the points noted was it doesn't actually state that in her job description. So some of them were more minor. I think I'll bring Marion in, but I think it would be easy if we give you the full report and with the list of all the actions that will really help. But Marion, do you want to add anything here?
Thanks, Amanda. Yes, I mean, you can see that the number of controls in that area was much broader than in the other areas. It's quite a generic checklist that they use. It's not adapted for law enforcement at all. So I would say that perhaps a few of the recommendations weren't really terribly realistic, and we had to think quite cleverly about how best to respond to those. To give you a sense, governance wasn't just about our mechanisms and our roles and responsibilities and our decision making. In those areas, they were quite happy, but it also covers regular refresher training, which is quite a burden on the constabulary operationally, and also quite high expectations of what we do with our third-party suppliers, including an expectation that we audit all of our third-party suppliers, which, if you take into consideration how many we have, that is quite a big ask.
Yeah. Okay. Okay. Thank you. Peter, you have a question.
Amanda, first of all, I thought it was a very fantastic report, very comprehensive. I even understood most of it. So, but I wanted to ask just a minor thing. I think it's 3.5.4. You referred to the limited assurance that was given by Tess Valley in relation to, I think it's over retention or data retention. And I just wondered what the context is of that, and whether it's a minor issue, whether it could be, whether it's going to be resolved. I just didn't get a feel for what the implications were.
Again, I'm going to bring Marion in on this one. Her team deal with data retention, and I can't remember the specifics of the particular elements of the audit, but I know she will be able to. Marion, can you respond, please?
Sure. Yes, this was an audit that I asked for. It was following our preparation for GDPR. We were concerned that a number of our legacy systems don't allow us very effectively to delete information when we should. Obviously, there's quite a time and cost implication associated with correcting that. So we wanted to really prioritise based on risk which systems we tackle first. We had a data set that we'd collected for GDPR, and the plan was to do some analytics on that. But my concern was the answers that were coming out weren't terribly consistent, and we hadn't quite got the methodology right. So I asked for the audit, so we had a sort of fresh pair of eyes on it, because I was aware my team had done a lot of work. I didn't want to scrap it all without sort of having an independent assessment of it. So that was the purpose of the audit, and it did confirm my suspicions that the way we'd gone about it wasn't going to give us the answers we were after, and we've now got a different plan of attack, which we'll be carrying out over the next few months.
If I can also come in, one of the, when we discuss what areas are going to be audited, we do focus on areas where we think we might need some improvement. So it's a double-edged sword. You know, if you always audit the things that are brilliant and you get a full assurance, we're not learning and improving. So as Marion said, this was an area that we really wanted to better understand, and by focusing the audit there and through understanding the limited assurance, we can get some really honed down actions that are going to make a difference and make an improvement to data retention. So it's something I feel more comfortable about when we do get a limited assurance audit, because it means we're really going in and understanding where our problems are and making sure that we fix them.
Well, perhaps if you speak to internal audit, they could give you lots more of limited assurances, and then you'd be even happier.
Well, we've got the audit plans going through to this year, but they do come and ask us where we feel our risks might be. You know,
yeah, no, I mean, I completely understand what you're saying. It makes absolute sense that you focus on the stuff you're worried about. Yes, yeah. Thank you very much.
Thank you, Peter. Gordon.
Yeah, I slightly take a different view. An audit, yeah, obviously you concentrate on areas where you suspect that you could have issues, but audits are meant to be a sort of a comprehensive approach to looking at all the risks you've got and what you're doing to mitigate them. So by just saying that you're sort of satisfied with a limited assurance does not give me a lot of confidence. Obviously you're not going to get every audit as an excellent audit, but I mean, that approach does not bode well. But anyway, we touched on that subject, but my real question is, you say that accreditation is not possible. when do you think accreditation will be possible? Is there a sort of a timeline for this PSN accreditation?
Yeah, I think by the time we've finished all of our rollout and upgrades on Windows 10, we're just rolling out the last of the Z scalers, and then we've got the Microsoft managed devices coming through. And I think as we get to that point, certainly for the constabulary, having moved off those legacies, I would say that by the time we go into 22, we should be green with the National Police Information Risk Team around that. We're just at the moment doing our GER return and pulling that together, so we'll know when they come in and audit that for us. We'll have a final line, but we really are close to that now.
Okay, thank you.
Thank you. Catherine.
Hello, Amanda. I wanted to talk on section 4, which is information security management. I don't know if you're going to be able to answer this, but there's some concern obviously there, particularly around paragraph 4.1.8, which is about, as I understand it, staff being intimidated by offenders, which I'm sure has always gone on, but has increased from what you're saying. And then you talk about this organisation, which I don't know much about, Auditing Britain, and obviously they are clearly causing a degree of concern. I wondered if you could just expand a bit on that in terms of, you know, how significant is this, and how concerned should we be?
So it's a shame we haven't got the deputy here, and I'm not sure that Lucy will cover this. So this area of my report on the personal security comes under full security, which is under the,
sure.
the deputy.
Sure.
And we ummed and ahed whether or not to include it, but because it's part of our incidents that get recorded, we have done. On the ones around the personnel, that one isn't an information breach because it's not as though the addresses have been released, it's following. And the discussions that were at the Thames Valley audit meeting, one of the things that the deputy had said is this isn't something unusual and newly done.
No.
Trying to make sure that people are careful about wearing uniform where they park and how well known it is. So I haven't got specific information on that one, but I'm sure either Lucy or Ace will be able to get that for you. And again, around the Auditing Britain, we're getting a lot of information and support from the regional units around understanding that.
So is this a national problem, the Auditing Britain?
Yeah.
It's a national issue. Okay.
Okay, Lucy.
Oh, well, just on that point around the Auditing Britain and the filming outside of police stations, what generally happens is these are individuals that overtly film from a public environment of the police station and then look to capture the reaction of the police in response to that. So there's been some quite strong guidance gone out to all of our officers if we get a consistent approach across the force around it. They're not actually committing any offence per se, but clearly there is an appetite there to kind of provoke a reaction sometimes. So we've been really careful about the guidance that we've given out to officers around that and reminding people about their kind of personal security, etc., when they leave stations.
Okay, thank you for that, Lucy. Can I ask another question,
yes,
Melvin?
Yes, you can. Yes, of course. Go ahead.
Slightly. I think I was the one banging on last year about the fact why do Thames Valley lose so much more staff than Hampshire? And I think you said to me, Amanda, partly because they're obviously a bigger force and you know the number. But I think, am I right in saying that the numbers are disproportionately high for Thames Valley? When you look at it's not just losing stuff, is it? It's also the actual the data breaches. I mean, they seem, I think they're about 2.5 times higher in Thames Valley. So my question really is, assuming that's not proportionate, you know, it's obviously is an area of concern. What you know, how could this be addressed? Because it's not going down, is it?
As I said, the CPS ones were going down, and then a disclosure change in the disclosure legislation had people kind of then the incidents became greater of being able to have a breach again. So we saw another dynamic come in.
Right.
As I said, we've got both the criminal justice unit plus the CPS side, getting training around that. One of the things that was going on in Thames Valley is there was an extra page to the MG forms that was going out that didn't need to, which was one that had personal data on. So they stopped that. We've had some business process changes and to see where it will improve, but others of them were being recorded as breaches. But then when we looked at them, they hadn't been data breaches. They were thought to be by the CPS because it was personal information, but actually it was information that was needed for the investigation. So whether we've played catch up on those. But again, Marion, I know you're close to Karen Cuss-Williams working on that. Is there anything I've missed that would be relevant to say here?
Only that the data going into this current year is looking a lot better. So I think that blip that Amanda referred to is now going back down again.
Okay, so steps are in train on data. What about sort of physical equipment and the loss rate of physical equipment?
So the physical equipment, as I said, Jason Hogg, the Deputy Chief Constable, has met with the head of PSD, and they're looking at a form of both penalising and checking whether you've got repeat offenders, as it were. So whether these are, you know, one person per loss or actually one person and several losses. He did reach out to Sarah Glenn, and she was also interested in considering similar, so that we take the same approach. And they're both working on that with their heads of PSD.
I mean, it's a difficult one because you would rather educate people than sanction them in an ideal world. But I guess equally you get to a point where you probably have to do something, don't you?
And some of it depends on the circumstances, because a number of the losses will be, you know, if you look at the forced phones, Slim, you know, chasing an offender.
Yeah, in the course of duty.
That
Sure.
seems to be gone, and it's balancing that time and effort into more detailed circumstances. But that's one of the things that he wants to do, and he's also going to look at some behavioural insights work around that as well.
Okay, thank you for that. And can I ask one very last general question on a different topic? You've obviously put lots of information in around COVID-19, and you know, from the sounds of it in the report, you've obviously responded quite nimbly. I just, you know, I'd value just your overall take on that. I mean, as a kind of IT response, you know, what have been the key challenges? Have you risen to those challenges, and kind of what is still left to do, if you like?
So I think, yes, certainly rising to the challenge. The rollout, originally the rollout of Windows 10 and Office 365 to all users across both organisations, the project for that planned to roll over about 18 months. Particularly in Office 365, we were having individual case studies, how to use it. We'd then give people kind of operational guidance. That just all got turned on its head and pushed out at a speed that was eye-watering. Now, a couple of things happened as a result of that. Firstly, you're guessing at the impact to bandwidth and connectivity, particularly around as we progressed and gave people video, which was obviously really important for meetings like this. What we found was everything was routing out to the internet in the same way, not just what we're using here, but contact management, how we were utilising with DEMS. So that gave us some issues. We had some real issues over access. What we did was looked at all of that differently and split different routes out. So we've got multiple routes out depending on the system. That's really helped us in load balancing. So there's been some good learning there. So it was kind of some of the things we did the first bit quickly, but then had to play catch up with the background and the infrastructure. The other bit that I think that we underestimated was the impact of people working on their own and on their own at home, what that means about their, I put it in inverted commas, technical capability. It's surprising how often when in a shared office space, somebody would go, can anyone remember how I don't know, you know, do I X or do Y, or I can't get my Excel working, or is anyone else having problems getting onto the internet? And that level of almost self-help. What happens is when people are on their own and also kind of locked into only being able to do their work through this, the calls and activities into the service desk just went through the roof. It was exponential. And it's easy to say, well, that would have been obvious, wouldn't it? There was a level of, we're giving people new technology. Yes, it will be. But I don't think we quite really considered the combined impact of people not being able to ask a friend stood next door to them, but also the absolute dependency they had. So it becomes really quite stressful. I mean, we actually pick up about IT connectivity and having access to it as a welfare thing these days, because what happens is just people get so much more stressed, you know, all of us, myself, if you know, you come to log in on a Tuesday and it's patch day and it's too slow and you can't make a meeting, you can feel your anxiety levels rising. And that made for some quite bumpy, intense calls with the service desk, who of course weren't a service desk, they were also in their own homes. And just a lot of that. We've got a recovery plan going on with the IT service desk, because it got to the point where we just felt the service wasn't where it should be at all, the timeliness for calls, how long it was taking to get and do fixes. So that is starting to improve. But the reflections would be, we probably should have looked closer at the numbers around the summertime to see that that was going on, whereas we probably, it kind of hit us like a train when we'd stopped doing all of the infrastructure work. So that one's been quite a learning for us.
That's interesting. Thank you for that. Thank you, Melvin.
Thank you. Has anyone got any more questions for Amanda? No? Well, thank you very much, Amanda, for a very comprehensive report and also for answering all the questions. So thanks to you and Marion. Thank you very much.
Thanks very much.
Thank you.
For any other items, or if not, we'll go. It's entirely up to you. It's in my calendar.
Okay. You're welcome. We'll move on to the Treasury Management Outturn report. Andy.
Sorry, thank you, Chair. Yeah, we're joined by Gemma, so welcome to Gemma. And
Welcome,
Gemma's just going to pull out some of the key highlights from the report.
Thank you. Good afternoon, everyone. This report fulfills the OPCC's legal obligation to have regard to the CITFA code and provides an update on the performance of the Treasury management function during 2021. All Treasury activity has complied with the OPCC's Treasury management strategy and investment strategy for the financial year, as well as complying with all relevant statutes, guidance and accounting standards. As we all know, the coronavirus pandemic has dominated 2020-2021 with huge effects on the economy and the population, both in the UK and across the globe, which has in turn affected local authorities, including the police and crime commissioners, and the management of their financial position. Table 1 on page 38 of your document shows the balance sheet summary at the 31st of March 2021 in comparison to the position a year earlier. Following publication of this report, the figures in this table have been adjusted slightly due to finalising the financial accounts, and as a result, the capital financing requirement was slightly lower at £54.67 million, resulting in internal borrowing of £24.72 million. The net investment position has not changed from the £72.8 million shown in your document, with usable reserves reducing ever so slightly from the figure in your report to £101.38 million, which represents an increase of £24.62 million since 31st of March 2020. I'm more than happy to get an update of this table sent through after the meeting, so you've got it for your records as well.
Thank you.
So, excuse me, overall, the borrowing position has slightly reduced in line with the OPCC's policy on internal borrowing, and no new borrowing was taken out during the financial year. Net investments have increased during the year due to various transfers to reserves and an underspend against some budgets, as well as a small amount of COVID grant not utilised in year. Table 4 on page 41 of your document shows the Treasury investment position at the 31st of March 2021. It shows an increase in all sections of the portfolio. The majority of the additional cash balance was invested in short-term investment options due to the availability of appropriate longer-term investments, combined with the prudent management of shorter-term investment balances during an uncertain economic market. Looking forward into the forthcoming year, the stable core of these additional balances will be invested for the longer term as appropriate investment opportunities become available. In delivering investment returns, the OPCC has operated against a backdrop in which the UK bank rate was cut to 0.1% in March 2020 in response to the pandemic. It has remained at this rate throughout the year, having an impact on rates across the market. Returns have been at or around 0% for liquid investment options and have not been significantly higher for other short-term options. Investment income has therefore largely come from investments arranged at fixed rates of interest prior to the pandemic and through the OPC's investments in pooled funds. Table 5 on page 42 of your document benchmarks the OPCC's investment portfolio excluding pooled funds at the 31st of March 2021 in comparison to the previous year and in comparison to other Arling Close clients. It shows that the portfolio has compared favourably with all Arling Close clients, including in the benchmarking exercises across all metrics. In order to minimise the risk of receiving unsuitably low investment income, the OPCC has continued to invest a proportion of steady core balances in externally managed pool funds as part of its higher yielding strategy. The OPCC's investments in pooled funds fell considerably in value when the pandemic hit world markets, but have since recovered well. This recovery means these investments are now worth marginally more in aggregate than the initial sums invested, as shown in Table 6 on page 43 of your document, demonstrating the importance of taking a longer-term approach and being able to ride out periods of market volatility, ensuring the OPCC is not a forced seller at the bottom of the market. The OPCC's investments in pooled funds target long-term price stability and regular revenue income and bring significant benefits to the revenue budget. The annualised income returns have averaged 4.46% per annum over the period the OPCC has held these investments. The cumulative total return from the OPCC's investments in pooled equity, property and multi-asset funds since purchase is shown in the graph on page 45. This highlights that the OPCC has benefited from strong and steady income returns over time and the way that capital values have recovered since March 2020. Pooled fund investments have no defined maturity date but are available for withdrawal after a notice period, and their performance and continued stability in meeting the OPCC's investment objectives is monitored regularly and discussed with Arling Close. As mentioned earlier, the OPCC's Treasury activities have complied with the SIPF code and the Treasury management strategy, and sections 11 and 12 of the report run through the various limits and indicators that apply to the OPCC's Treasury activities. Thank you for listening. That was all I was planning to say for the moment. Sorry, I sounded a bit funny. A spider came down the wall right next to me as I was talking to you.
Okay.
Didn't even notice, Gemma. Didn't notice. Thank you.
Does anybody have any questions?
Thank you, Gemma. Peter.
You're on mute, Peter.
You're on mute. You're on mute.
You must get your cat because the cat will eat the spider and then you'll be able to concentrate on us. I did have a question either for you or Andy, I don't know who, in relation to para 5.5, where there's a comment about the previous PCC's policy of limiting or reducing external borrowing and therefore obviously increasing internal borrowing. And there's a reference to this, obviously, to some extent, reducing risk and indeed reducing cost because there's less interest to pay. The converse, obviously, is that if you've got less long-term external borrowing, you can find yourself in a situation, obviously you'll have less reserves available, but you can find yourself in a situation where you're looking to make external borrowing when the situation is perhaps not quite so attractive. So I just wanted to ask either of you to put that in context, in the sense of what discretion is there really when one's looking at the ratios and the rules, etc., for a PCC to say, oh well, let's limit our external borrowing, let's use our internal borrowing, or vice versa. I would have thought the discretion's quite limited, really. But I just would like some elucidation on that as a policy.
Yeah, so we'll look at the overall position in terms of the CFR, Peter, and the need to borrow, where we've been historically with that borrowing requirement and where we are sat now with reserves. And we go through that on a regular basis with Arlene Close, our Treasury advisors, who will also look at our balance sheet position each year and help advise us. So funny enough, we were on a call with them this morning, as it happens, and their continued advice to us at the moment in terms of managing that borrowing position is to continue in terms of first port of call in terms of using internal cash. So quite a timely question, because we did go through that with them, with that this morning. So it's one that we keep on the regular review. We have quarterly meetings with Arlene Close, so they're quite close to our position, and you give that advice accordingly. So it's one that we keep on the review. As you'll see from the overall report, reserves and balances remain very healthy. So the fact that we're internally borrowed is not a concern at the moment in terms of the overall cash position, and we just keep that under review. So I guess the discretion more sits with me as a CFO in terms of monitoring the overall position and working with our advisors.
Yeah, that's very helpful, Andy. But I was more interested in whether the PCC actually whether the PC's policy has a meaningful impact on this, because your comment in the report seems to suggest that you'd effectively been, that his policy had been, irrespective of the advice, as it were, his policy had been to limit external borrowing. But what you're actually saying is you, on a regular basis, you're monitoring internal reserves, external borrowing, getting the balance right with external advice. So does the PCC really have a policy on external borrowing?
I guess it's more the policy that they put in place through me as a CFO in terms of how we manage our borrowing position going forward. So it's the collective policy really of us as an institution, and how I view that from a CFO perspective.
Okay, so generally speaking, is the summary that with, let's just call them reserves, cash and reserves, healthy, it makes sense to be borrowing, it notwithstanding that interest rates must be at historic lows, it makes sense to be borrowing internally rather than taking on external borrowing, which I think in any event is only available to you on a long-term basis, isn't it? You can't borrow externally short-term, can you?
No, we can take out short-term borrowing on a kind of regular rolling basis, and in fact that is Arlene Close's advice to any local authority they support at the moment, is that their first port of call would be short-term borrowing because the rates are still so favourable. But yeah, what you said out, your summary, Peter, is entirely accurate, but I think the important thing is that we keep that under review on a quarterly basis.
Okay, thank you.
Thank you. Just referring to paragraph 8.2, which describes a payment being made in advance, thus generating a saving of 0.25 million.
Yeah.
Could you explain how this happens, and is this something that's always available every year?
No, the first time this became available was in the financial year 2021. It came about, historically the pension fund has operated a pooled rate across all its scheduled bodies, but it moved away from that in the last valuation, which gave more flexibility around how we could manage the total payments in from employers. So employers, certainly the scheduled bodies, were given the option for 2021 to either make a 3-year upfront prepayment or a single annual repayment, which could of course be revisited the following year. In my case at that time for the PCC, we reviewed our position at that time and decided in terms of the overall Treasury position that we would make a 1-year prepayment and we ran the numbers to show the benefit of making that 1 year prepayment was far greater than trying to hold those investments in kind of short-term cash. And that's based on the fact that the pension fund was able to give a far higher return on that prepayment than we would have got through the markets, and that's linked to the overall investment position of the pension fund. Gemma might correct me if I'm wrong. I think it was about 2.4% was what the pension fund paid. I can't quite recall now, but it was far in excess of the kind of 0.1 that we're getting on cash balances in the market. So it's definitely a worthwhile transaction that we undertook, and we have repeated, just for information, we have repeated that transaction for the current financial year. So again, on the 1st of April 21, we made a further prepayment to the pension fund of employer contributions. I don't think anything to that, Gemma. Is that captured from your perspective?
I think the only thing I would add to that, in that with the PCC making that prepayment, it happened to coincide with a fantastic year for the pension fund investment value, and that will come back and work considerably well for the PCC and their contributions.
Yeah, because we'll capture the upside of that performance overall as well.
Okay, thank you. Any more questions, colleagues? Catherine, Gordon, Peter? No? Well, thank you very much for running through that very expertly and comprehensively. Thank you very much.
Thank you.
Go and catch that spider, Gemma.
I'm going, yeah.
So we move on to the annual governance statements. Yeah. So we've got the PCC and the Chief Constable. Who's going to go first? PCC first.
Okay, just scroll into the papers. I think the papers show the track change. Is that correct? So I wasn't proposing to work through the whole document, Chair. Again, much taken on board. You will have had a chance to read the papers, but more than happy to take observations or questions.
Chair, could we see the person who's talking?
Apologies, Peter. Turn my camera off. Apologies, Peter.
Okay.
I always like to see Andy.
Fine. Any questions from this? I mean, I noticed that the significant change is to be cognizant of the impact of COVID, and there is suitable wording inserted in there, which is different from last year. And there's a change in the wording around the scheme of corporate governance, which is taken out, and there's been a change on that, Andy.
Yep, and we've obviously put in the actions for the forthcoming year towards the end of the document, and we've also made reference to SIPFA's financial management code. So SIPFA had a couple of requirements in terms of these statements this year, so we've reviewed the statement against SIPFA's requirements, and again, the document updates that, as will Richard's document.
Yeah, the only thing I was wondering, bearing in mind all the discussion and debate that we had about the going concern issue in the accounts, which resulted in delays to signing off the accounts. I don't know, is this something that you might consider for inclusion in this statement?
Well, it is mentioned, isn't it? In one of them, there's certainly a mention of there's a mention of the going concern issue, isn't there, in one of the governance reports? Sorry, I thought there was.
I don't think we had it specifically in ours, Peter. Just looking back through it, we certainly mentioned, as required, COVID, so that was covered at the start of the document.
Yeah, COVID was in. I didn't see the other.
I don't believe we referred to going concern. I don't think it would be appropriate for this document in any event. It'll get mentioned in lots of other documents. It will certainly get mentioned in the statement of accounts and in some of our disclosure notes, and you'll see in the audit plan, which we discussed later, that will be on the auditor's agenda again for this coming set of accounts.
Okay. The only other question for me is, this is a shadow year for the new SIPFA Financial Management Code. By shadow year, you're going to be self-assessing for when it comes into being, I guess.
Yeah, and we're still waiting final confirmation of when that's going to be brought in, Chair. So we watch and wait on that, but both myself and Richard separately continue to, work through that and make sure that we're making or putting in place the appropriate things
So
to be compliant.
So at this stage, it's not possible to give a sort of a self-assessment opinion on areas of possible non-compliance.
No, I think, the broad response is that we believe we are compliant with the code, and there are certain aspects that don't easily read across to policing, but our assessment is that we're compliant, and there are no areas of major concern, of concern really, to be honest. I don't know whether Richard wants to say anything from his perspective, but that's certainly, I think, my takeaway.
Yeah, I'd agree, Andy. So our initial overview, not going into a great amount of audit or detail on the subject, but our initial overview of where we think we sit against the self-assessment framework is that we think we'll be looking to comply with all of those aspects that are relevant for police. So we don't see any evolving issues from it, but we'll wait to see how the guidance comes into being and what actions we'll need to take. Our fear is more that we'll have to create almost an industry, because there's quite a lot of topics to consider within it. And if we do have to produce an evidence pack against each of those, then it will become quite a cumbersome process. So we await the guidance to see how we need to deliver that in practice, and we'll be able to update you when we get that.
Thank you. That would be useful. Peter.
Chair, while we've got both of the chief finance officers, I just wanted to ask about one thing. Question really of whether it would be appropriate for the governance statements to include it. We had the mental health issue for staff become a severe red risk quite recently, and I think we're waiting for the data to back that up. And the governance statements do deal with COVID, the effect on the organisations of COVID, etc., but there isn't actually any mention whatsoever of this particular impact on the staff. Now, I don't know whether it's appropriate for that to be in the governance statement, but it does seem, particularly in the light of the information we were given to support this now becoming a very high risk, that there are very significant issues. And I just wondered if any thought had been given to at least referring to it at some point.
Should I take that one, Andy? Because it's probably more one for the constabulary, I think.
Yeah.
So, yes. So what I'd say is, in terms of it being a strategic risk from a constabulary perspective, it's something which the force is paying a lot of attention to. So we put a lot of measures in place to mitigate against that risk. And so it's not an issue in terms of the amount of effect that it's having on our people and our people's ability to do their job. And so it's not becoming an issue, but it is a risk that we're aware of. And so we were taking the appropriate actions to mitigate it, to prevent it from becoming an issue, would be my view. So it's not an area of weakness that we would be seeking to address as such within an annual governance statement.
Okay, well then it may well be that when we look at the risk register, there might be some questions as to how that's been scored, because it did seem to me, in the absence of any evidence that there was an immediate likely impact on the force, that actually it was being scored to. I'm not taking the situation lightly at all, but it did seem to me that it was probably being scored rather too heavily in the circumstances. Anyway, that's fine. Thank you very much.
Thank you. Any other questions on the governance statement? No? Good. Thank you, Richard and Andy. So we'll move on to the audit planning report. Kevin, over to you.
Thanks very much, Chair. So this is the annual planning report for the year that has recently ended, well, a couple of months ago back now, 2021. The planning report's a little bit delayed compared to the previous years. That's a direct result of the backlog we're having to work through from general delays in audits from last year, from when MHCLG moved the deadline, and the other departments for where we had to audit as well. So we've got the planning just about finished, certainly in a sufficient state for us to be able to bring that report to you through to this meeting, and I wouldn't anticipate we're likely to find any more risks and just about to start on the year-end audit over the next couple of weeks. if I could direct you firstly to the overview dashboard, which is on page 87 of the pack. I think it's worthwhile just summarising. There's not a major change in terms of the activities or the focus of the risks as compared to the plan from the prior years, which we've highlighted here as a very high level summary. So I think that's a point to pull out. But what I will ask to do is to just hand over to Sarah just to take you through the key audit risks and the level of focus on those this year.
Okay.
Thanks, Kevin. So if I can start with page 88 of the agenda pack. This just talks through our materiality. So consistent with prior year, we have set the group materiality based on gross expenditure on services. The same goes for the CC as a single entity, and for the PCC as a single entity, we have used gross assets. And for each of these, we've taken 1.8% in order to calculate our materiality, which, as I mentioned, is consistent with our prior year approach. The next page I'll take you through is page 91. So this is just talking through our responses to risks. So we've got here our mandated risk under ISA 240. It's a presumed risk that revenue might be misstated due to improper revenue recognition. When we look at what this means for the public sector and incorporating practice note 10, we focus this risk in relation to specifically inappropriate capitalisation of expenditure items. So we do specific procedures around property, plant and equipment additions, and looking to see that items are capital in nature and that expenditure doesn't include revenue items. And we incorporate our data analytics to help us with this testing as well. We've also got another mandated risk that we haven't noted here, and that's just to highlight to your attention, consistent with last year and prior years, is the risk around management override, which we apply throughout our audit procedures. And how we address that risk is looking specifically at journal entries. So we will do specific tests around journals, and we will look for more unusual journals. We will have a focus on estimates, and we will also look for any significant one-off transactions, and we'll look into them in more detail. So just to add that detail, which is not on this slide. I'll move nextly to our other areas of audit focus. So we've not identified these as significant risks, but they are other areas that we will look at. So first of all, we have got the valuation of land and buildings, and we have got the pension liability valuation. These are both significant estimates to the group, and they have significant subjective inputs that go into them. So we will look at these estimates. One thing to note for each of these areas of audit focus, we do have a new international standard of auditing that is applicable for this year end. That is ISA 540. And the appendix at the back of our audit report, we have gone into a bit more detail for you just on what that means for the audit procedures, and we will have to go into slightly more detail than we have in prior years, so just to flag that to you. And the last point I will touch on in the other areas of audit risks is the final risk we've got noted on page 94, and it's just about reviewing the disclosures that are made in the annual accounts in relation to going concern and making sure that there is the sufficient detail. Similar to the estimates, there is a new revised ISA out this year, so ISA 570, which means there are additional audit procedures that we need to perform to get sufficient assurance. And again, we have attached those procedures and the additional detail in the appendices. And I'll now hand back to Kevin, who's just going to talk you through the changes in value for money.
Thanks, Sarah. Yes, as Sarah mentioned, there are changes around the value for money responsibilities, and that's a direct result of the NAO updating and producing the 2020 Code of Audit Practice, which has come into play this year. So in the previous year, there was only one overall criteria that we had to report against. Now that's been split down now into three: financial sustainability, governance, and improving economy, efficiency, and effectiveness. So we're still required to undertake a risk assessment against those criteria, and we're in the midst of that process, and we haven't identified any risks at the moment that we need to bring to your attention as the committee. The key output is going to very much change compared to prior years. So in the prior year, all we had to do was effectively put a paragraph within the audit report that says, are we satisfied or not with the arrangements that the body has put in place. What we've got to do this year is actually set out a much more detailed commentary, and that commentary reflects those 3 areas of the arrangements. The purpose of that is to bring to the public's attention, should they be so interested, of the actual arrangements that each organisation will have in place, and therefore they can have a look at them and understand them. What I think I've been describing this as is that for a good organisation that is well controlled and well managed, that commentary shouldn't be a surprise to you, because all it's doing is telling you the arrangements that you've already have in place, ones that you should be experiencing throughout the year, and it should therefore reflect what you already know. For organisations that are on a, let's say, a more development journey, there might be a bit more learning to those organisations and value for those, because we will be making recommendations through that commentary where things need to improve or actions those organisations may need to take, including as a response to the risks we may have identified. So the value of the commentary is going to depend upon the specific audience, but that is the key change that you're going to see as an output at the end of the year. And that commentary comes in an auditor's annual report, which in terms of this year, the NAO have confirmed can be produced up to 3 months after the date we give the audit opinion. And that's a specific transitional arrangement for this year, for the first year, also taking into account the pressures associated with COVID-19 and the backlog I previously mentioned. So I think that was probably the only other aspect from the report that Sarah and I wanted to highlight, but we'd be happy to take any questions on the areas we've covered or any of the other content if the members have them for us.
You're on mute, Melvin. You're on mute, Melvin.
I beg your pardon. Thank you, Andy. You had your hand up. I wonder whether you had a question to ask.
I did. I thought you were saying I should speak, but I just want to make sure. Thank you, Chair. Just want to bring to the committee's attention really some discussions I've been having with Kevin over the course of the last 2 weeks since he issued his audit plan, really, and it won't surprise you that it's in the area of going concern. So I guess I'll reflect back some positive discussions, which has been good. So thanks for Kevin and Sarah for their engagement with us in that regard. I suppose that I think I would highlight one major difference from last year, unless Kevin can correct me, because I think last year there wasn't this presumption that we would be a going concern, whereas I believe this year there is the presumption from the outset that we are a going concern. And the note really this year is about the disclosures that we put in place around that. So in the audit plan where Kevin's got the inherent risk, we've had some conversations around that, mainly not in terms of not having a disclosure note, because I fully agree that we need a disclosure note. It's more in terms of the references and evidence base that we use in terms of that disclosure note. I think where we've got to is an accommodation of perhaps slightly different views, if I can put it that way. So there will definitely be a going concern disclosure note, which will reference the statutory nature of the PCC and the constabulary, and the fact that there are no known changes to the legislative framework which underpin that statutory nature or the funding regime which supports us. But immediately adjacent to that, there will be a fairly consistent note picking up some issues we discussed for the 2021 accounts around financial sustainability, which will pick up and reference some of the key issues that Kevin will be interested in. So we'll certainly have in place the work that we did for the previous set of accounts. So we'll certainly have in place a cash flow forecast, and we will certainly reference things like COVID, etc., as part of that financial sustainability kind of reference. But that's how we propose framing it in the accounts. And I think that reflects hopefully a positive discussion between myself and Kevin, but maybe I can ask Kevin just to comment from his perspective.
No, that's a fair summary, Andy. I wouldn't have much to add to that. The way we left that summary was we're happy to see it. We'll have a look at how it's going to be presented, because obviously we haven't seen it yet, and we'll undertake the relevant audit procedures. So I think you've described that fairly well.
Perfect. Thank you, Kevin. That's helpful.
Thank you, Andy. Catherine, you have a question.
Well, I think Andy's almost. Sorry, Mike. I think Andy's almost preempted my question, but I just wanted to double check this. So, in the I'm on page 94. So that's the disclosure on going concern. Is that a standard area that you are putting into all of your public sector audits, Kevin? So is that just a standardly worded paragraph, if you like?
Yes and no. So there will be a standard risk in the majority of authorities, local government, NHS, etc., that we will be focusing on going concern in the COVID environment, etc. So that's the yes. No, in the basis of where we have undertaken our risk procedures and we have identified things we are really worried about, that will be finessed, focused, tailored, that's the better word, tailored, to actually draw out those issues, to be really specific what they are, and then our focus against those will be much more specific in saying, and therefore our expectations would be we would need to see X, Y, Z. So where we are with our risk assessment at Hampshire County, sorry, not Hampshire County, Hampshire Police, and the PCC and the Chief Constable, is that we haven't identified any major risks. So what we're just trying to focus on here is that the disclosure in the accounts is appropriate in the circumstances. So is it complete? Is it accurate? And then to make sure that we are taking into account the new ISA 570 requirements that we've referenced as well. So yours is at the lower end of the risk range as compared to some of those other bodies where we would have more.
Okay, so from what you've both said, we're sounding more confident that this year's process is going to be easier and less painful than last year's. Would that be a reasonable assumption?
I think it should be. We've been through that process last year. We've got a solid base to build on. We just need to repeat that and, you know, update it in terms of what's happened in the last few months since we last went through it. So yeah, I would hope very much so.
Okay, well, we shall watch this space with interest.
Yeah, and I think helpfully, Catherine, the audit approach has been updated. There's been some supplementary guidance notes issued for Kevin and his team. I think that was NAO issued those, Kevin, which has kind of slightly changed the emphasis as well, which I think is helpful from our perspective, because I could, whilst I probably didn't, well, we know we didn't agree last year in terms of what we were required to do. I did have every sympathy in terms of Kevin's requirement under the kind of audit guidance as to why they were asking some of the questions that they were asking us, even though we felt, you know, collectively as CFOs that going concern wasn't an issue and we couldn't really follow through the logic. But, you know, from an audit perspective, I could follow the notes in terms of why some of those questions were being asked. I think helpfully the guidance has now been updated through a supplementary guidance note, which makes it much more, I don't know if the word's targeted or specific to the public sector, and makes it an easier process for all, I believe. But as you say, we shall see how it plays out.
Well, that's reassuring. Thank you.
Richard might want to comment. He's had his hands up. Yeah.
Yeah, Richard, over to you.
Mine was a different issue actually, so I don't know if there's any more on that issue, but
no, on that issue, yeah, it's good that you've been liaising, and we look forward to this year's accounts being a more straightforward process than last year. Over to you, Richard.
I was going to mention WGA, Kevin. Is it worth updating the committee on where we think we are with whole of government accounts?
It may well be, Richard, yes. I'll let you start.
Well, it's essentially sort of it's under review, isn't it? And we don't have any timelines as such. So Kevin mentioned sort of a later timeline, perhaps for value for money, and we are looking at a later timeline again for whole of government accounts. And I don't think we know when we're likely to see that being produced at this point in time. So anything further to add on that, Kevin?
No, again, a pretty good summary of where we are. So we are waiting for HMT to publish their timelines, of which the NAO will then respond and then instruct us what we have to do as a result. So it could well be we finish the work on the financial statements, we finish the work on the value for money conclusion, but we still can't certify the completion of the audit until we've been instructed and have completed our work on the whole of government accounts. So another uncertainty in space to watch as we go through the audit this year.
And I think just contextually for the committee, it's worth understanding, I think this is right, Kevin, that whole of government accounts have been qualified year in, year out. It's a strange process anyway, in that I don't think they've been signed off any time in recent years. So we go through a whole process where we submit our stuff, Kevin audits it, signs us off, but then at national level, the whole thing doesn't get signed off. So it's a strange and interesting process, I would say.
Yeah.
But it has the possibility to elongate the entire process.
No,
as well.
it did.
Yeah. So as much as we can kind of work together on the going concern issues and how we properly present those for these, we still might be delayed by value for money, and then again on top of that, whole of government accounts.
Well, I presume we would come to the committee again, looking at Kevin.
Yeah.
They're signed off subject to the WGA position, presumably, Kevin.
Yeah, so we can still give our audit opinion without needing to complete WGA. So we can say the accounts give a true and fair view, or not, because obviously I haven't made up my mind yet, because we've got to do the audit first, but hopefully so. But yeah, so all it would be left is the last bit that says we certify closure of the audit. That's the bit we might have to delay, but that wouldn't mean we have to go back and revisit any of the numbers in the accounts. That bit would still be signed off in the audit opinion given. So it's much more of a technical delay, let's say.
Okay, thanks. Can I just ask? I understand the ISA and other new requirements, and I understand the need, Kevin, for you to do more work in future. Can I ask the two finance directors what their take is on how much work some of these new requirements what the impact will be on their workload?
On our side of the fence, you mean?
Yeah.
Yeah, I mean, certainly. Yeah, I mean, certainly if we take the topical one we talked about in terms of going concern, certainly last year's accounts, year before's accounts, that certainly created quite a bit more work for us. But I guess the flip side is, having done that work once, we're now well placed to kind of roll that forward. So in that particular instance, that will be less work, for the current set of accounts, because we've kind of been through the process. But yeah, across the piece, as new requirements come in, it inevitably increases our workload as well.
I agree. So where we understand what the requirements are and we can plan for that, then actually that's very manageable. Where there are new and developing and emerging issues, that's where it can add quite a significant amount of time for us to liaise to find out the best way of meeting the new issues.
So could the expanded value for money assessment have a major impact on you two?
Well, potentially, depending on the amount of evidence required, I guess, as you work through the process. If Kevin reaches the point where he's not satisfied he's got sufficient information, then I guess that will lead to more work. But
okay, we shall see. Okay, thank you, Kevin and Sarah. Any more questions for Kevin and Sarah? No, thank you very much. We'll move on to the internal audit progress report. Karen.
Thank you, Chair. Good afternoon, everybody. Just my routine report, so very familiar to you. So just closing off really the 2021 year. You'll see that we've got one work in progress still, the health and safety report, which we're now very close to issuing a draft report, so all but complete. All of the other drafts for the constabulary side are now gone to final, so they are all reflected in my annual opinion, which we'll cover next. So we've just got the two shared services drafts still just to finalise. And then regarding the 21-22 plan, we've split that by quarter and agreed that with both the constabulary and the OPCC. So all of the quarter one audits are well progressed, and the quarter two are in the process of being scoped as we speak. The only other thing I wanted to draw to your attention was the summary of management actions, which I think continues to show a positive direction of travel, and that will be covered in the paper under the exempt items from the constabulary. But happy to take any questions in the detail.
Any questions? No? Okay, opinion.
Okay, thank you. So yes, moving on to item 10, our opinion report. So I really wanted to start with a thank you. Obviously, it was an unprecedented year with COVID, and really we had to change our practices overnight. And you'll be aware that during the year, CIPFA produced some guidelines for the heads of internal audit in case we needed to limit our opinions this year.
I'm really happy to say that that hasn't been necessary. And obviously, as I've been reporting to you all through the year, we changed our working practices pretty much overnight. We had a bit of a slower start, but with the help and support of both the OPCC and the constabulary, I think that virtual audit approach has worked incredibly effectively. And from my point of view, it hasn't compromised quality, and it hasn't compromised the quality of the annual report that I'm able to provide to you today. So we haven't had to fall back on any of the guidance that SITFA issued around limitation. So all of the work that we've done and the annual report is in line with the public sector internal audit standards. And as I mentioned just now, it reflects all of the work that we did during the year, with the exception of one work in progress, which I don't believe affects my opinion. I've also taken into account the work of the TVP internal auditors around information management and ICT, the work we've done around shared services in Hampshire, and also the results of the ISAE 3402 review that was done by Ernst & Young around the IBC controls. So bringing all of that together, I've concluded that I can provide reasonable assurance over the risk management governance and controls operating across the OPCC and constabulary. There's a lot of detail in the reports just to back up how I've come to that opinion, with a little bit of commentary around the limited opinions that have given. I think the one around allowances you discussed at length at the last committee, and the others, the other one, the commissioning one, will be in the exempt papers later on for us to discuss. So I think those were they were the highlights really. I just wanted to draw to your attention, but very happy to take any questions.
Thank you for that, Karen. No, I'm pleased that sufficient work has been done to enable you to give an opinion, despite the impact of COVID, and no doubt the way you work has changed significantly.
Very much, yes.
But apart from that, yeah, I think the opinion is reasonable based on the audits that have taken place. Have any of my colleagues any questions for Karen?
Yes, Chair.
Peter.
I just wanted to ask Karen, but I'm sure she'll tell me I'm asking this in the wrong place. Bonuses and acting up allowances, it may well be that I need to wait for another section of your bit, but I just wanted to flag it up now. The main thing being, I think, a common concern with the members of the committee in being told that the force is now looking forwards to remedies and not backwards, because it can't access the information it needs to investigate the problem. So it's probably it probably comes up when you look at outstanding actions or something. But anyway, I just wanted to mention that now while I thought about it.
Yeah, thank you, Peter. I think what I can say in public session is that we've got a piece of work planned into the 21-22 plan to follow up on the allowances work. And I think that will come up in our review of minutes under the exempt section and, as you say, the follow-up of actions.
Okay, thank you.
Thank you, Karen. And yes, we will come on to it in session 2. Okay, thank you for that, Karen.
Thank you.
Next meeting, 28th of September. Is there anyone any other business for part 1? No? Thank you very much, everyone. That completes part 2, the public session of this meeting. What I'd like to do is just have a 2-minute short break while I get myself a glass of water. So can you stay online and we commence in 2 minutes, please? A bit past 4.
So Melvin,
Hello.
that rope behind Peter if things get desperate.
Yeah.
Peter, we were trying to work out what that rope behind you was. You're on mute.